everyone, Michael here from Storehouse Analytics. Welcome to the Storehouse. It's the 6th of May 2016. Thank you all for being here. I'm sorry about the slight delay this week. I did mean to do a video earlier, but I've been suffering with a bit of a sore throat all week, so if you hear me cough a bit, please forgive me. Okay. Before we go on, as usual, I want to say a big thank you to everyone. After the last Back to Basics video, the subscriptions on the channel jumped by 11. So we're up to about 62 now. Thank you all to all of you for the work you're doing, sharing the videos and recommending it to people. Thank you to all the subscribers and all the people who've been interested in my work. Remember, the goal is 100 subscribers by the end of this month. So please continue to share the videos and spread the information. Hopefully we can meet that goal together, which should be fun. I'm planning some event. If we do meet that goal, there will be an event which I'll tell you a bit about later. It's free, at no cost, so don't think I'm trying to take your money or anything. Okay. All right, so as always, we start with the disclaimer. Please pause the video and read it. Remember that trading is risky and you don't want to lose your shirt out here. Don't trade with money you can't afford to lose. Okay, as I said, pause the video and read it. We're going to move on very quickly. I hope to make it a fairly short video. I don't want to make it too long. But what I thought I would do was to show you all the power of supply and demand going through a multiple time frame analysis, top-down analysis of the Aussie dollar. This was a trade that my mentoring students and I identified just this weekend before it kicked off, which was really good. They're all coming along very well, really star students. So let's go quickly. We've analyzed this chart before, so I will be pretty quick. Please go back to the other videos if you haven't seen them. So as always, we start with the monthly chart, identifying the curve, and we've said that this area is a worry for us because of the fact that it's an area that's broken the trend line. Where is my trend line? So that area has broken the trend line, leaving us with a demand zone there. So we're into monthly supply. We know that we don't want to be buyers up here. We want to be selling any opportunities that arise in or around this area. Okay, so going down to our entry time frame, which is the daily chart. We go to the daily chart, we identified, so all this area, or you know what, maybe what I will do, let me do it on this chart so that you see all the lines so that you can understand this. So I hope people understand this. This was the chart the way we saw it. Monthly supply, price into it, we were looking for selling opportunities. So going straight down to our daily chart, which for us was our entry time frame. So these are the two areas with we're looking at them on the daily view. This is that monthly supply, all of it, and this is that monthly demand, all of it. Okay, so price rose. This is the price entering that monthly supply zone. As always, and this chart was like so when we analyzed the market. Okay, so we did that on Saturday last week. I already had it before then, I think, but with the students we did it on Saturday. So this was price going into the zone. That's the trend line. Obviously that trend line is broken. We identified our zone that broke the trend line, which was obviously this one. So we're at monthly supply and we just created a daily supply zone. First supply zone, and then with this red drop, this red candle here, we created another drop supply zone inside a supply zone inside a monthly supply zone. So two supply zones on top of each other inside a bigger time frame monthly supply zone. And look at what happened right there. That was the entry. Where is my arrow? Right there. And now I didn't find out what caused this because I don't listen to news. I didn't know what caused this spike into the zone. It was one of my other students just yesterday who was telling me that it was the Bank of Australia coming out with a reduction in their interest rates that caused this. Till yesterday, I didn't know what had caused this spike. All I knew was these were two areas that I was very interested in to be a seller because of where we were on the monthly and also the creation of these two areas on the daily time frame. So that was the trade that we took, and look at where it is now. Now, if that doesn't convince anyone, let's look at two trades that we took which were published publicly. I'm going to show you the chat on Storehouse Analytics, the trading institutional order flow chat in TradingView. Here is the trade, so you know that these are being posted live. Here is the trade that I posted when I said my entry was hit, and I'll show you the picture before, so you know that nobody's telling lies or anything like that. Here is the picture I posted well before the trade. You see that? That's me, obviously, posted on TradingView. It's a 180-minute chart. That's the zone. Let's go to our charts for the S&P 500. So this was the trade right there. And I will talk to you about this one because we added to the short in this area on the 60-minute. So this was the zone. You can see it spiked out a little bit, but because of the way we set our stops using the dark charts, it didn't get anywhere. And our stops were not here, for those who might think that we placed it here. Our stops were still above this area, in not a big, kind of stop with stops above here. No way. Our stops are still here, but for a good enough distance away from the zone to protect us if we get these kind of ugly spikes. So we were still in the trade, and I exited my positions mostly down here. Now I left just the one position up just above this spike here, and I got taken out to the pip yesterday, and look at it now. But who cares? I made what I wanted to make from most of the trade already down here. Now I'll take you to a 60-minute quickly, which show you where I at. And this again was something that I posted. Again, I want to show you so that you all see that it's not there's no gimmicks to this. I posted it just as it hit the entry, and I was saying to people, see, so that is the trade. Again, it's on the 60-minute chart. It's posted into the public domain. That's the date it was posted on, and that's the time, my time. So I told people I was shorting this zone, and here we are. That is the zone right there, and the rest is history. The rest is history. So if you entered this zone for a swing trade because of where we are on the S&P larger time frame, you're still in this trade. You've gone $20 in your direction. This was my annotation, that this area removed all of this demand, and we shorted right here on the retracement, and that this trade was in addition to an already short position from a higher price level, which was this level, and it's one way of adding to positions using supply and demand. Okay, I'm rushing a little bit because again I don't want to keep the video too long so I don't lose people in watching really long videos. So that was the trade. We took the exact same trade in the NASDAQ. This time it was on the 3 hour really. So That's that. You see that? That one also, we exited down here. Price came up into another supply zone that was created as it came down, which took out all of this buying down here, retraced into this area. So this is the area I'm referring to for those who might not have their eyes trained fully yet. So this was another supply zone that was created on the way down where you could have added to your position. Let me blow it up a bit so you can see it. So price came into it. Now let's just think for 1 second, as this is happening, this rally up, there are people buying this. There are people saying, oh look, it's going up, let's buy. What unfortunately people do not realize though is that you're buying, well, after a rally into a supply zone. It's never a winning proposition. It's never a winning proposition. So that is the trade, that is the current trade that's going on in the NASDAQ, which is really interesting. So that's that. Those are the trades that I wanted to show you, and also going through that top-down analysis on the Aussie dollar to show you the big trade for the week. There, that entry there. Okay, I hope that helps people. Lastly, also, I wanted to show this. I posted this on a public forum as well on Forex Factory, talking about how to use the US dollar in analyzing the major pairs, looking at the inverse relationship between the dollar and the euro and the British pound and the New Zealand dollar, Canadian dollar, all the majors, because they're all paired against the US dollar. So this is the US dollar index. And the point I was making is to get more confidence in your trades on the majors, for example, you want to try and match up the demand zones on the US dollar with the supply zones on the pair that you're trading against the US dollar. So I identify this demand zone as a fresh demand zone, but price almost came back to it. Even if you said this is a return to it, it's a very shallow return. It didn't actually make it all the way back, but let's say it did. The fact that it couldn't even make it into the zone and stopped right at it tells us that this area is quite strong. So on at least the first return, you should expect some bounce. I'm not saying it'll continue going. I'm saying at least expect a bounce. Now, if you go to your pair that you're trading against the US dollar and you find that at the same time the US dollar is entering a demand zone, whether on the weekly or the daily, you're also entering a supply zone on that pair on the weekly or the daily, the odds are better for you trading that pair against the US dollar going in the opposite direction. So if dollar is entering into demand, look to be shorting the pair. I mean, let's look at the euro, for example, which is the highest correlation with the US dollar. No, let me change this chart and change this one to the euro. It happened as well in the euro. Look at the euro. The euro came into this big supply zone. Let me just blow it up and draw it for you. So the euro came into this supply this week, obviously, after a nice rally. It came into this supply around the same time that this was falling into demand. Dollar into demand, euro rallying into supply. If you narrowed this zone down into maybe a 30-minute or a 60-minute, you would see a nice zone above in here, and it's fallen a bit. So for those people trading the 60-minute chart, you probably had a nice trade, or the 30-minute chart, nice trade to come down to here. So that's how this inverse relationship would work, using the US dollar to match up opposing trades on the majors. I hope that helps you all. Thank you all for listening. Before we finish, as always, those are my contact details. Please share the videos. Get your friends to subscribe to the channel. Help us reach the 100 subscriber mark by the end of May, by the end of this month. Thank you for all the feedback. And for those of you that I'm mentoring at the moment, let's keep it going. It's really helping a lot of people. I've had fantastic feedback, and people are already beginning to make some money using the help that they're getting. Okay, if anyone's interested in the mentoring, here it is. It's affordable. It's pay as you go. If you don't have enough per month, we just don't have a session that month. You pay when you have enough funds. It's not very expensive. It comes to about £20 a week. That's, maybe 3 cups of coffee a week. It comes to about £20 a week for an hour a week. That's what it comes to. So if you're interested, again, those are the contact details. And I'm getting a lot of hits on Facebook. I've had a lot of people wanting to be friends on Facebook, people who I share mutual friends with, because I post the videos on Facebook. But that's interesting. I hope to meet you all someday. Thank you all again, and remember, they're protective stop losses. Use them. AKT. Bye.